Hello and welcome to This Week in Markets. Dalal Street faced a brutal week. The Sensex ended Friday at around 74,564 while the Nifty closed near 23,151 with both indices down a little over 5% during the week. In fact, this was Nifty's worst week since June 2022 and Sensex's steepest weekly drop since May 2020. The market cap of BSE listed companies dropped to about 430 lakh crore rupees, down from roughly 449 lakh crore rupees a week earlier. Volatility remained elevated too. India VIX ended the week at around 22.6, up roughly 14% week on week, indicating that the fear premium in market is very much alive. So what triggered this sell-off? With tensions in West Asia still unresolved, crude hovered near the $100 mark, raising concerns about inflation, the current account deficit, and corporate margins in an oil importing economy like India. The rupee also hit a record low near 92.48 per dollar, amid global risk aversion that pressured emerging market assets. Sectorally, it was a broad-based sell-off. Nifty Auto was the biggest loser, plunging about 10.6%, marking its worst weekly performance in nearly 6 years. Nifty Financial Services, Nifty IT and Metal indices also slipped roughly 4 to 6%. Meanwhile, FMCG and pharma provided limited defensive support, both ending the week only marginally lower. Larsen & Toubro, Mahindra & Mahindra, Eicher Motors, Ultratech Cement and Maruti Suzuki were among the major laggards during the week. There were a few interesting pockets of strength though. Kitchen appliance makers surged as the LPG supply crisis pushed households and restaurants to look for alternatives like induction cooktops. Shares of TTK Prestige, Stovecraft and Butterfly Gandhimathi rallied 10 to 15% during the week. Flows also tell an important part of this story. Foreign institutional investors dumped about 35,000 crore rupees worth of equities this week, while domestic institutional investors pumped in nearly 38,000 crore rupees, helping cushion the fall. On the policy front, there were several developments worth flagging. The cabinet extended the Jal Jeevan mission timeline to December 2028 with an enhanced capital outlay that showed some positive movement in water infrastructure sector. The government also eased FDI norms for countries sharing land borders with India, including China. Small investments of up to 10% ownership without control will now be allowed automatically, while certain manufacturing proposals will be cleared within 60 days. Meanwhile, the NSE moved closer to its long-awaited IPO, appointing 20 merchant bankers to manage the listing process. And finally, reports suggest that the government may cancel the current bidding process for partly selling its stake in IDBI Bank after bids came in below expectations. So where do markets go from here? Next week brings a packed global calendar. India will release its February wholesale price index inflation data on March 16. The US Federal Reserve's FOMC decision is due on March 18, and according to the CME Fed Watch tool, there's a 98% probability that the Fed will keep rates unchanged. Meanwhile, the Bank of Japan and Bank of England will announce policy decisions on March 19, which could influence global bond yields, the dollar, and risk appetite. From a technical perspective, traders are watching the 23,000 level on Nifty as immediate support, with 22,700 as the next key level if selling intensifies. On the upside, 23,500 to 23,800 remains a near-term resistance zone. That's a wrap for this week. Do you see a relief rally next week or more downside for the markets? Let us know your views in the comments below.